Most investors believe success comes down to one thing: picking the right stock, finding the perfect entry, nailing the next big winner. But if stock picking alone created wealth, the average investor wouldn't underperform the market year after year. Here's the uncomfortable truth: you can identify a brilliant company, buy it at a reasonable price, and still lose your shirt. Because there's a skill that quietly determines your success long before any returns show up. It's a skill most of us never train. It isn't intelligence, it isn't insight, it's emotional discipline. The ability to manage yourself under uncertainty, to navigate fear and greed, to act when it matters, and resist acting when it doesn't. On paper, investing looks rational. You study fundamentals, you read earnings reports, you analyze growth. Everything seems under control. But markets aren't just numbers, they're emotional machines. Most of your losses won't come from buying bad companies, they'll come from your human reaction to uncertainty. Selling too early, locking in a tiny gain out of fear it will disappear. Buying too late, chasing momentum after the real move has happened. Panicking during a drawdown, turning a paper loss into a very permanent, very real one. Stock picking tells you what to buy. It doesn't teach you how to behave while owning it. And that behavior, it determines everything. Imagine two investors. They pick the exact same stock. One panics during the first 10% drop and sells for a loss. The other stays calm and holds and watches it recover and grow. The difference isn't knowledge, it's emotional control. And today, this skill is more critical than ever. We live in a world of AI-driven markets that react to human sentiment in milliseconds. Fear spreads faster than wildfire. Greed compounds exponentially. The faster the market moves, the more crucial your discipline becomes. You don't need to beat the algorithms. You just need to stop feeding them your predictable emotional reactions. Most investors think their mistakes come from wrong decisions. They don't. They come from overreaction. Overreacting to red days, to scary headlines, to social media hype. The gap between a winning investor and a losing investor isn't knowledge, it's consistency under stress. The losing investor trades emotionally and abandons their plan. The winning investor accepts uncertainty and stays boring while everyone else chases excitement. The market rewards patience. It punishes emotion. If you can just sit still when everyone else is running for the exits, you've already gained a massive edge. So how do you build this discipline? It isn't a talent, it's a skill you can train. You start with structure. You predefine your entry and exit rules before emotion has a chance to take the wheel. You size your positions so you can actually sleep at night. If a position is keeping you awake, it's too large for you. And understand this: the market constantly invites you to do something. Most of that invitation is a trap. The best investors are inactive far more than they are active. They observe, they wait. That constant activity feels productive. In investing, patience is productive. In the end, stock picking gets the headlines, but discipline builds wealth. The market doesn't reward excitement, it rewards endurance. You don't need to predict the next big winner. You just need to survive uncertainty. The investor who masters their own emotional discipline will outperform the one chasing the perfect stock every single time. Because the market doesn't defeat most investors, they defeat themselves.